Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow.
Believe, but it's October 1st. That, of course, is the letter V as in victory, but they do it upside down. We'll talk about that later. It's 11 a.m. on the East Coast. Let's get something out of the way. Amanda sent a text. Let's just put that up. Some guy named Lee Ho Fook or something made a comment. We can put right. I don't know who the dude is, but put this up, Amanda. Oh, Lee J, not Lee Ho Fook. That was the guy from Warren Zevon's song. Do the Red Sox only?
Whoa! Werewolves of London.
Yeah, Werewolves of London.
Can you sing the lyric?
I know the Lee Ho Fooks.
Yeah, I know that Doug Cass could do that. All right, do the Red Sox own the Yankees? Kind of seems like it. That's Lee J. What do you think the emblem is on the top? We can't see what's on his hat.
Can't see that.
But you can see that's kind of a blue hat, and maybe there's a red sock on it.
Yeah. Well, given that reach out, maybe it just says Johnson on his hat.
All right, Lee J.
That's pretty funny.
So we're bottom of the ninth.
Pretty funny.
We got three guys on, 3 singles in 5 pitches, and you would think that at the very least, you got that guy in for third. Right?
So here you go. You want to know what I thought?
Correct.
I thought Stanton was probably going to strike out against Chapman because Chapman is friggin' nasty. And then I didn't know. I didn't know. But I thought Chapman would go. I was hoping he wouldn't bounce into a double play because that's,
I thought Stanton should have. Did he swing?
I love Stanton.
Swing at the first pitch. I would have gone out there and just try to demolish that ball right out of the gate. Well, but whatever. Who am I?
Chapman and me. I'm sorry. By the way, Amanda is doing great. It's in the wake of her birthday. If you remember, Chapman was throwing like mid-90s the first couple batters. I'm like, that's interesting. Then he dialed it up. The guy's been ridiculous.
So Chapman shut down the Yankees in the 90s.
Yes, he did.
Okay, so let's talk about it. We did not spend a lot of time on this shutdown, on this potential shutdown.
No, we did not. And it turns out for good reason as the market's unchanged.
Isn't it interesting though? You've been doing, if we get to January, fast money for
19 years. Yeah.
And we've talked about this a lot over the years. It's like, back in the day, did we spend there weren't shutdown. I know there was the potential for a shutdown. Or there was a shutdown, 11, 12 or something like that. I can't remember.
Last 2018, there was, I forget. Yeah.
But my point is like back in the day, we did not spend a lot of time, when we were on trading desks or, managing capital at a hedge fund or something like that, thinking about so much macro stuff. You know what I mean? It was really about what was in front of us, what were the stories, what were the catalysts, and all that sort of stuff, and maybe a little risk management there, here and there, but maybe not as much as we should have. But now it seems like we are so laser focused, whether it's just because we're, also in the financial media a little bit. Like, do we overthink some of these things? Because yesterday we had a rally into the close. We were down 35 bips or something like that because people are covering shorts in front of a potential shutdown. So we basically close up a little bit. Today we're down 45 bips in the overnight, right? Or something like that. And now we're flat. And at the end of the day, who cares? The VIX is stuck here again at 16-ish or something like that. So listen, my point is there no fear? Is this dangerous that people are basically not paying attention or not managing risk in a way that could highlight the fact of maybe it's a protracted, shutdown. Maybe it's, a whole host of other things. Maybe not getting this data that we might not get over. Maybe it's jobs. Maybe it's PPI, all that sort of stuff.
So you started by saying, do we overthink it? And I can speak for myself. Clearly I overthink all this stuff because all of the things that we talk about seemingly on a daily basis, all of the concerns that I've had, which, by the way, most of them have been well-founded, none of them have been market moving. And, I think that's a function of a number of different things. I think number one on the list, and something we have talked about, is just sort of the constant flow from the passive investing community where, again, it just comes down to none of these things that we talk about matter because money just flows into the market seemingly every day. And, ETFs and mutual funds and all these different things, they've taken over the landscape. So the people that try to be tactical, the institutions, the hedge funds, whatever it is, I mean, maybe they can do that on a day-to-day basis, but clearly over the long run, money flows win. And I think that's what we're seeing here. However, it doesn't mean that, valuations don't matter. At some point they will. And it doesn't matter. It doesn't mean that all the things that we're concerned about don't matter, because a lot of those things have only gotten worse. And, you had a jobs or ADP, whatever the hell it is. I mean, that didn't augur particularly well for the jobs front. I mean, despite the fact that the GDP print was good, that's a lumpy thing. That's probably a function of pull forward. I think there is a slowdown going on. I mean, all those things that we have been discussing are still there. They have not gone away. And in some cases, again, only have gotten worse. But to your earlier point, I mean, the level of complacency is remarkable, but maybe that's the right course of action in the regime. I don't think that it is, though.
All right. Couple things. We have Butters today, Guy. If it's Wednesday,
This first day of the month is a Wednesday. You start with Butters, man. That is badass.
It's badass, and we're doing this. Okay, so you know why they do this?
Well, why don't you tell people?
Our viewers know, because you've done it every October for the last 5 years. Okay,
this might be a new listener.
Okay, because you don't want to compare it, or you don't want to get it confused.
No, the letter U is September.
Yes.
And, in a perfect world, when you have time on your side, you can discern the difference. You can see the difference between a U and a V. However,
it's hard.
In the rush of writing things down in the pits of the commodities exchange, a lot of times a U and a V would sort of look very similar. So the clever folks on the exchange decided to make their V like a TP.
No doubt. So one area, Guy, where there seems to be a little trepidation. We talked about it on Monday. We talked about it on our Tuesday. Our friend Doug Cass, he actually was out shorting the banks Monday and Tuesday. Let's pull up a 3-day chart of JP Morgan for a second, because here's a like a stock, which, it's like the Nvidia, right, of the what's going on here, of the X, tech complex here. And it's interesting to me that immediately the market opens here, and some folks, and to me, I don't know if this is passive, they just hit the sell button here. You know what I mean? And so this stock was down, I think, 2% from the open, and now it's kind of recovered a little bit. But look at those series of lower highs, the lower lows. Let's pull it to a 1-year chart for a second. We looked at it yesterday. Also, this doesn't speak to, I don't think, anything at JP Morgan specifically, you know what I mean? But it is indicative, I think, of just the kind of risk appetite in this space.
Doug pointed out, and what we've tried to point out is just the metrics in terms of price to book, price to tangible book. JP Morgan is probably trading at levels we haven't seen since pre-GFC. Again, whatever the G is for you, for me, it's great. You call it global, but basically prior to 08, 09, these are the levels of valuation it's trading at, and I just don't see the justification for it. I mean, a lot of people will point to, again, lack of regulation or the rollback of regulations, a robust calendar, M&A activity, all those different things. And yeah, they're all true, but they've all been priced in for quite some time. Even Jamie Dimon talks about the richness, the expensiveness of his stock. So here you are. I think that trend line is a strong one to look at. I think, to me, there's an inevitability to get back down to that sort of 275 level, that horizontal line. Maybe it's a tad higher. And at some point, that 200-day moving average is going to sort of coincide, just in terms of each day time decay, that going up a little bit. So that's where I think we're headed. And it's not just JP Morgan, it's some of these other banks as well. I mean, Bank of America yesterday, if you want to throw that chart up, we showed you that long-term, very long-term double top, and you got to go way longer than that to see the levels that we traded up to and the levels that we had traded to prior. And it's even if you want to go back longer than that, and you can take a look and see. So there you go. So Bank of America, to me, looks like a bit of a sell.
Yeah, to me, the obvious one, if you think of all of those sorts of I guess catalysts, you'd say, going forward for some of these banks, and I think for a money center bank like Citibank, Guy, I just think a lot of the stuff, whether it's FIC, whether it's equity trading, whether it's investment banking and all that sort of stuff. These guys are, I know they've been hiring like crazy bankers and the like, but I just think that this is one. Let's go back to that 5-year for a second. after that move, it's still cheap to all those other names that you mentioned. You know what I mean?
It
But
is.
like
But
that sort of parabolic move just seems a bit silly to me.
the point we made about Citi, and we made it for a while, is that it's 60% of tangible book, and that's probably, it actually got lower than that. It just didn't make any sense, and we thought that Citi could trade up to or around, somewhere between 102 and 105, which is right around book value, and that proved to be the case. Now, I think it probably stalls here, and we've said that for a while. It still trades a few turns cheaper, and more than a few turns cheaper, on a price to book or price to tangible book to a JP Morgan, and maybe they should, but that gap obviously was closed considerably. The Bank of America chart, real quick, and I just looked at this myself. You got to go all the way back to 2006, I think, to see the last time we were at these levels. So you're talking about a 20-year level in terms. Yeah, so there you go. The 20-year level in terms of where we just traded up to, and there is no justification at all for Bank of America, other than the fact that it gets dragged up with the rest of the banks in terms of these ETFs for it to be at these levels.
Yeah, and we'll take a much closer look at the banks and some of these other financials, next week as we get towards the end of the week, because the week after that will be all the bank earnings for the most part. Yesterday we also focused on some of these more consumer sort of lending names. We're seeing a bounce in some of the buy now, pay laters today, but COF was a concern yesterday. Capital One. I think it's important to remember, one of the biggest M&A deals over the last few years was Discover
and Capital One. Yeah.
This will be interesting to see, maybe some of the benefits of that integration. Maybe they got them early, maybe they get them later. Who knows? We'll take a closer look at this one. Also, let's go over to the AI complex guy, because there's some interesting things going on there. NVIDIA, you mentioned yesterday, new all-time high. The stock was down a little bit today. They can't quit this one. There it is. It's back towards the highs. Nice little consolidation. Who knows, as we get into Q3 earnings season, what a bunch of their customers have to say about CapEx and demand, all that sort of stuff. But it is interesting to know, guy, that look at like a Micron today, and it's up 5.5%. Look at Western Digital and Seagate. So the memory players have joined the party in a meaningful way. And it's also interesting to note, I mean, look at that. I think this has got to be one of the best performing stocks in the S&P 500. Look at how far that is above its 200-day moving average.
I think it was a $30 stock in April, that trough, and it was a $120 now. It's amazing.
Yeah. And so this is, I mean, listen, we talk about these memory names. I mean, these are meant to be very cyclical, sort of stocks. And, because you have this secular shift now, investors, I don't listen. If these guys cured cancer, I probably wouldn't buy this stock right here. I honestly, I don't get it. And you could say to yourself, well, it's only trading at 19 times this year and 17 times next. It always trades at a massive discount to its peers in the market. Why? Because there's no real pricing power most of the time in these sorts of segments, and it's a commodity sort of business. And so you have they will always run ahead of the fundamentals. Is that 100%? Fair?
Yeah, it is. And Micron, the same thing. Highly cyclical, at times highly commoditized. I mean, we talked about the last quarter. I mean, the quarter was fine. I'm surprised it's built upon the move that it had, but here we are. And right now people are saying that these memory names, that's the next iteration of this entire AI thing. And again, valuations be damned, or just price movement be damned. It's sort of this chase, and the chase continues. And here we are now in October, a few months left in the year, which is amazing. And with each passing day, the chase gets stronger and stronger. Now, we've seen some strange things in October, and we'll see. The VIX is still north of 16, not telling much of a story. I mean, clearly the market does not care one iota about this shutdown. I don't know exactly what that's telling you, other than the fact that it anticipates some resolution over the next couple of weeks. But here we are, Dan.
But one of the things I'd say, it's interesting that they're selling banks here, but they're buying, AI. And it feels like AI now is almost this defensive sort market, you know what I mean, kind of pocket of like market interest here, probably because of that secular bull thesis that exists that is never ending. And it's like, to your point, it started with the chips, then it was the hyperscalers, right? Then it was the server makers, then it was the neo clouds, you know, that sort of stuff. And, you know, so to me, now that they're getting to memory, they're gotten to energy, that sort of thing, it seems kind of full up. I just want to make one point about Western Digital, guy. So let's just look at fiscal 26, because that's what we're in here. So this is a stock that last year, or is expected to earn like $6.50. Next year, maybe $3.20 or something like that. So you have like, what is that sort of growth? It's, I mean, it's like 10% growth. Okay, so that's 10% earnings growth. All right, and then on the revenue side, you know, it's expected to do, you know, maybe mid-teens this year, 1% revenue growth next year. And here's the thing that I think is most important: is gross margins are expected to be 41%. So why do some of these stocks in the space trade at these huge premiums, whether it's a Broadcom or, you know, so you got the ASICs guys, you know, Nvidia was trading at a huge premium, and now it's not so more. It's obviously kind of gotten, you know, the growth has decelerated meaningfully because they had 70+ gross margin. You know what I mean? Like, you can make the argument. And so these are not that, you know, like, so they don't have pricing power is the point. I just,
no, they don't, not to the extent that some of these other names do. So it's, you know, but again, I don't think people are necessarily looking at, well, again, I don't think they're looking at those metrics. I think they're just trying to play the game. All right, what are people going to chase next, and how can we get in front of this? And, you know, you bring up the rules of investing. I know, Doug Cass, what's that cat that you like with, you know, the first rule is when margins start to deteriorate.
Dan Benton.
Yeah, Dan Benton. You've, you know, I think you've talked to him, and
well, I've had him on the podcast a couple times.
Yeah, he repeats a couple of the rules a couple times, but one of the main rules, if memory serves, is once margins start to decelerate, they don't re-accelerate, and you don't want to get caught in front of that freight train. And that's been my concern, unfounded, with Nvidia for a while. They're I'm just telling you, and I think you would agree with this, they are not going to enjoy 75% margins in perpetuity. I mean, it's just not going to happen, regardless of what story the CEO tells.
Yeah. Hey, I just want to hit Dell for a second. Dell just had a move over the last, I want to say, week or so. It is interesting, guy, to the penny today. It stopped, or at least stopped momentarily at that November high. And I think that's 45-ish, highlighting a little bit. The all-time high was made in early 24. If they pull that out to
it was like at 160 or something.
Yeah, it was I'm looking at 1/3. Oh no, hold on. Sorry. Yeah, 180.
180. Jeez.
So I just think it's interesting to keep an eye on the server makers. There was one other thing I wanted to hit in this space. Oracle. This is one that, you know, finally came off a little bit. It rallied off the lows. Meta. Okay, so we talked about the rotation within the Mag 7, if you will, right? So Microsoft has not been able to get out of its own way since its last quarter, since its earnings. So it'll be fascinating to see how the stock reacts. But look at Meta here quietly, guy. It's down about 10%.
Yeah.
And this is what filled in that entire earnings gap. So I think this earnings period, like, if you just have modest beats, because all these companies, I guess they kind of beat and raised on the last quarters, or not, I guess they did. If you don't have the beat and raise this far into the year, you have to start asking yourself, you know what I mean? Like, are these stocks, are they going to retrace down to those moving averages? And is it trading a bit technical at this point?
Yeah. So Paul, we have the Meta chart up. You can draw a horizontal line across from that February, excuse me, there. So, I mean, that should have been support, in my opinion. And, you know, past resistance a couple times. If you go back and look, that February high, we traded straight down in April. We traded back up to it and failed for a couple days. And then we obviously blew through that on the gap. We should have stopped-ish around those levels. We didn't. What does it mean? I don't know. I mean, you can also look at an uptrend that's been in place, that's been broken. There are a lot of things here to sort of be quasi-concerned about just on a technical basis. And maybe 670 or so is the ultimate level we trade at. This is not trading unlike what we're seeing, to your point, in Microsoft and some of these other names. So you had these big blow-off tops, and now they're basically giving the entirety of it back, which, nobody's talking about right now because the S&P is obviously at an all-time high, but they should be talking about it.
Yeah, I mean, you could also make the argument that it's fairly bullish that you're seeing this rotation out of some of these names.
You can.
Big drivers. I want to pull this one up. Netflix. We've talked a little bit about this throughout this year. They stopped giving subscriber guidance, right? And that was obviously one of the big points, I think, of volatility, if you think about it, in and around earnings over the last, I don't know, call 5 years or whatever. And so you look at this thing, and it has not confirmed any of the new highs in the NASDAQ or the S&P 500. It really feels like it's got a date for that 200-day moving average a bit. And so it's interesting. Doug pointed this out to me. I'm not on socials. I don't see these sort of viral sorts of things unless somebody sends this to me. But pull up this tweet from Elon Musk. And this is not a rant, okay? But you can't make this stuff up, okay? If Elon had been triggered or was triggered, by cancel culture and woke culture and all this sort of stuff, years ago, which kind of started his sort of, political sort of move, if you will, how is it that this free speech absolutist is out there basically trying to cancel Netflix? Like, do you see this?
Oh, he responded to that tweet from Doge designer.
But he said cancel.
Yeah,
Netflix.
no, I'm looking at it. Yeah, I mean,
it's just fascinating to me that these are the folks that we put a lot of faith in. These are the folks. This is a guy that his board wants to incentivize with $1 trillion. You know what I mean? This is the sort of behavior of corporate America right now. And I just find it fascinating because if you are 2 years ago or 3 years ago, cancel culture is this and that, like how are we like putting up with this sort of stuff? I just don't get it. Okay.
No, look, behavior is an interesting, that throw that out the window. I mean, again, this is obviously non-market stuff, but just look what happened during the Ryder Cup. I mean, golf is supposed to be a sport where decorum still matters. And I understand there's some events where people get animated and stuff, and it typically happens at this waste management one in Arizona, but it's not mean-spirited. It's just people sort of having fun. What I saw over the weekend in the bits and clips that I saw was mean-spirited stuff from, it's embarrassing to a point, but I think it just speaks to exactly the period of time that we find ourselves in. I think decorum's been sort of thrown out the window. Now, obviously, you can't trade on the back of that. That's just me sort of getting on my soapbox, but I do think it's a bit of a problem.
Yeah. I mean, listen, the other thing I just think, you talk about passive versus active investing. I like to focus on the behavior of some of these managements and the like. And, Elon is always going to be a bit of an outlier, I guess, you know what I mean? But this is one of the largest companies, Tesla, in our country, in our markets, that sort of thing. And it's just interesting that folks are just willing to kind of disregard certain behavior and put up with other behavior, but also punish. The things that get punished are really interesting to me relative to the things that go untouched. Let's talk about Tesla for a sec, guys. So it's trading up 2.5%, right now, trading about 454 or something like that. It was trading 240, I want to say 6 months ago. Expectations for Q3 deliveries. We've been talking about it here. We thought consensus was really low. We thought the tax credit going away at the end of, this past month here was going to be, a big driver for demand. I have to assume the pull forward was massive. I think consensus was for 430,000 cars delivered. I think some folks got as high. I think this Troy Tesla is at 480. So you could drive a truck through that range, right? A lot of the sell side is in between that. So now here we are. You've had this massive run. Let's just say they come in at 470. It won't be decimated because of that. It really will have to be, what do you think is going to happen this current quarter? Let's pull this up because a lot of folks have been debating, what does the company do? If consumers got really used to this $7,500 tax credit for most of their cars, at some point, if they don't keep the prices low, it's likely to kind of really hurt demand, right? So what percentage of the now $7,500 credit that doesn't exist anymore is the company going to eat to keep demand, right? or do they raise prices and then they just basically say, we're going to have to kind of work through this, and demand's going to be lumpy and all that sort of stuff. So this is a tough one here, Guy.
That is a tough one. I mean, look, I mean, just the way it's been trading, it would seem logical now. By the way, for you folks playing the home game, at around 355 or so, Nathan thought you could see a bearish to bullish reversal, and that's obviously taken place in a pretty meaningful way. It looks as though, to me, just my eyes, go back to December euphoria, where I think the stock traded 490 or so, and that seems where we're headed now. All the things you mentioned, I'm with you. I mean, those are all the fundamental things around the company. People will say to me, and they've said to me over and over again, the auto business is a loss leader. You should not be focused on it. It's all the other things that they're going to get involved in. And we've talked about it ad nauseum. And, maybe there's some truth to that. And maybe that's why the fundamentals that we look at, and declining margins and sales and competition, all that stuff may not matter in the long term for this company. In the short term, given the way it's trading, it feels like it's going to do this levitation back to those prior highs that we saw in December.
Yeah, well, it's going to be exciting to see. I think the numbers come out tomorrow morning. I want to hit this one, Guy. RBC Capital had a note out today on Reddit, and I think I don't know if you recall this. Before it went public, they had just inked a deal, I'm pretty sure, with OpenAI, and to give them access to their API. And, there's a lot of publishers, first and foremost, but also social platforms, which were a bit reticent to give them access, to their data so they could make money off of it, right? And possibly lose traffic to these new, properties like OpenAI or ChatGPT, And so this stock had a huge rally after its earnings 3 months ago. It kept on going, got through those prior highs, new all-time highs. You saw this thing got decimated in the period from the highs in February to the lows in April. So here it is today. It's down 10%. RBC is talking about daily active users and how they've been declining, and the citations share of ChatGPT, has been going down dramatically. Here, you ready for this? ChatGPT had dropped from, hold on. Reddit's citation share on ChatGPT had dropped from 29.2% range to 5.3% just since September 10th. So maybe there's some switch that got turned off, that sort of thing. So, you say to yourself, they got this deal. That revenue that they recognized in the lead up to their IPO was like a huge, it was, a big part of the upside that they were able to print after that first quarter out of the gate. So some switches flipped here a little bit.
I look at that gap from the summer, August-ish. I think it's about 165 or so. And I believe that's where we're headed. So you look at this chart, you obviously had that bit of a blow off top. I mean, I don't know if we talked about it in real time, but there you go. Right now, we're ish around the levels that we saw at a prior all-time high, which was back in February, within, a couple bucks. And that gap fill to me looks like it's a foregone conclusion. And you do a back and fill to the 200-day moving average. And if their business is declining, or just in terms of that metric alone, you have to be concerned, because valuation clearly doesn't make any sense. So, yeah, I think this is probably headed towards that gap fill in a pretty quick fashion, if I had to guess.
All right, here's another one, Guy. If we talk about shutdown, protracted shutdown, who's adversely affected? Is Walmart adversely affected? Stock's down about 2% today. That kind of surprised me a little bit out of the gate. Well, Costco's down about 1%, Target's down 1.5%.
What's interesting about, I mean, I would have thought Walmart would actually do well on the back of this, but
everyday
obviously today, not so much. So the market's a funny thing. Again, we play the game all the time. If you had told me all these things, how would you have reacted? I mean, the first thing I would have said is Walmart theoretically should do well in a government shutdown, as people are looking for value and lower prices. Today, at least, that's not the case. I can't say why. I mean, but that's just not what's happening. So, market's a funny thing. And maybe there was some buying in Walmart ahead of it, and now people see that it's, the event has happened, and they realize that there's not the apocalypse in terms of the market. I mean, as we're sitting here, the S&P is unchanged, and the S&P is within 10 handles of it's within 10 handles of 6,700 level we've never seen before, which is just astounding to me.
Yeah, go back to Walmart for one sec. That 200-day moving average, Guy, a matched low from late August or something like that. I think you just kind of load the truck up there, you know. And I want to say one other thing, because I know this is something that's on your mind here. You know, we're sitting here, we're talking about the markets, we're talking about it relative to, you know, something that happened really in our politics, right? If you think about it, and this is something, you know, we don't take lightly. There's a lot of folks out there who are adversely affected by this. When you think about, you know, your reliance on your income, your reliance not just monetarily, but also for, you know, just your peace of mind and all that sort of stuff with your job, and then all of a sudden you realize, you know, how fickle that can be to be furloughed and not get paid. And there's a whole host of other government services that don't get people rely on, you know what I mean? And then the fact that, you know, the administration is talking about accelerating, you know, some of the plans with Doge and making, you know, you know, mass firings off of this.
Mhm.
This is serious stuff. It's serious for individuals, and it's sad. You know, we sit here and we talk about the markets and all that sort of stuff. And I know this is stuff that you give a lot of thought to.
Of course I do. I mean, it's people's livelihood. You think of, you know, I don't know how many times we've said it, but, you know, the wealth gap in this country, the amount of people living paycheck to paycheck that are concerned, that are having to make decisions that in the United States in 2025 they shouldn't have to make. And you layer on top of it the fact that you have all these people furloughed. I mean, some of these people, by the way, still have to go to work and are not going to get paid to do it. So, yeah, it's extraordinarily sad. And you know, there's enough blame to go around for everybody. And it's amazing that we find ourselves in this position, and you hope that it is reconciled soon. But, you know, it just speaks to, again, the level of the have and the have-nots, and the problem with that wealth gap and wealth inequality and all those different things that seemingly get worse each and every day. So I'm very sympathetic towards it.
Yeah, and it's pathetic that it's politics. You know what I'm saying? Because it shouldn't be. It should be policy by both parties that benefits the people, right? It's just that simple. Here is a policy that appears to be benefiting the people.
By the
Let's
way, you
pull
said
up.
matched. You said matched low right before in terms of Walmart.
Yeah,
You know what that makes me think of? Let's see if you're in my head at
the
all.
matched low, the matched
Yeah.
low.
When just hear the word match the way you said it.
Um,
No, I know you don't know.
well, tell me what
Well,
is
that
it?
would be from Days of Thunder, when Robert Duvall tells Tom Cruise that they put a pair of matched tires on the
Oh
car,
yeah,
and
nice.
he could make, you know, he could
He
pass on the
What did he
outside.
do? Little spoiler alert: he didn't put matched
Well,
tires
no,
on.
there's no such thing. But he
That's
just
right.
told him that to shut him up and to calm him down.
Yeah, that's a great. I got to go back and watch that movie. Do you see that? Nicole Kidman is getting divorced from Keith Urban.
Yeah, I saw that.
That's where Tom Cruise. That's where they met. And
I,
Keith Urban, they've been married for 20 years. You
yeah,
got to
almost
meet
20
Nicole.
years. I
She's
know.
good friends with. Well, we don't have to dox anybody, but
No, I
yes.
know, and he's been very upset. I've been talking to
Oh,
this gentleman, and
yeah,
he's very
yeah.
upset about it. Anyway,
We have a friend who's good friends with a couple, and that's hard. You know, I mean,
very
what team
hard.
are you on? Team Nicole or are you on Team Keith? You know
I'm
what I
not
mean?
on. I'm just on. I'm on
You don't have
team.
to.
I'm upset.
You don't have. See, I like that guy. All right. So one policy that is helping the people is this prescription drug deal that was announced. Okay. And so again, some of the things that we heard right out of the gate. I mean, listen, this is good policy. Okay. You look at these companies, we know that this is a bipartisan thing. Drug prices are too high. Why are they so much higher here in the US than they are in other developed markets, right? Developed economies, that sort of thing? It never made any sense. So if they want to avoid the tariffs, right? These are these US drug makers here, agree for more manufacturing here, agree to lower prices for consumers, right? That's great. And the stocks, I mean, you know, you guys talked about it. I wasn't involved in the conversation on Fast Money last night just because I don't know jack about pharma stocks, but look at these moves. Look at Lilly. Who are the biggest beneficiaries?
Well,
Obviously,
look at Merck, look at Pfizer, look at Bristol. Yeah, I mean, the bullseye is off their back for the first time in a very long time, and they're acting in kind. I mean, Bristol Myers is up 5%. I don't remember the last time this stock has been up 5%, but you know, you look at I mean, they're all going to look pretty similar, but you know, Merck, for example,
can you
I
chase?
do think you can chase here. I mean, Merck's up 5.5%, and you know, this stock has been in the penalty box since probably, I don't know, March-ish. And now theoretically, without that bullseye, there should be some upside to these names. So I do think you can chase. And if you really want to play a little stock market here, do a longer term chart of Merck. You can see we've been in a pretty steep downtrend that may have just gotten broken. So there you go.
Yeah. All right, I'm just looking around on my main page. All right, let's do gold. Let's do some of the stuff, some of the stuff that's traded on this
Can't quit
CME.
it.
You know what I mean? Like let's do some futures. Well, all right. Let's look at the market. Let's look at the E-minis, the futures here for a second, the S&P 500. Okay, let's start here because we actually haven't done it. You just mentioned we're within a few handles of all the all-time highs. Let's throw that 200-day moving average up here. We just keep grinding, guy, just grinding. And we talk about that 200. It's going to be at the breakout level pretty soon. This is one where let's see if it can kind of break out, right? And if it can't, then maybe you do take a shot on the short side and you look to cover. Let's look at some levels here. If they can isolate some of these things, I'd love to get your take where you think there's a gap that has been attempted to be filled on a couple of occasions going back a month ago. Let's here, pull that up. Let's make it a little shorter. Yeah, there we go.
There you go.
All right, what are we looking at here, guys?
Well, I mean, again, this just goes back to how we started the show. If nothing matters, I mean, one would have thought this headline alone would have been good for 50 to 75 handles to the downside in the S&P, just given the fact that we've been doing is rallying lately, and here we have a day where it's unchanged or slightly higher. I mean, it's hard for me to continue to make this bear case, although with each passing day I get more and more bearish. But maybe what you're looking for is some sort of engulfing pattern where we take out that prior high and then close lower on the day. That obviously we haven't seen that, but I think that's the type of price action you're looking for in order to sort of, I think, galvanize that bearish stance.
Yeah. So the prior all-time high, this is on September 22nd, was 65.76. We're at 67.37. Let's pull this out a second and let's put a 50-day moving average on there. So that 50-day guy is really right at around 6,500 or so, which seems like a probably reasonable spot. That was the consolidation that we had basically for the month of August towards the upper end of that. And you see that 50-day. I mean, if you were to sell these and maybe let's say in and around 67.40 and use a 67 what was that high? It was 67.56. So we're talking about 20 handles from here. And that's where you'd put your stop. You put a target down there, 6,500. So the idea is maybe you're risking 40 handles or something like that to kind of look for a 200 or so move. So to me, that looks like the trade. But right now, like to your point about the market not really giving a shit about a government shutdown, because you tell me, let's just say tomorrow we walk in and there's some deal to reopen the market.
Market be up.
How much?
Yep.
How much?
Market will be up 35 to 50 handles. And you say, well, why? And because it didn't sell off on it. And because that's the market that what I've said for a while and what I believe to be the case, every piece of negative news is completely discounted. Every piece of positive news is magnified 3 to 5-fold. And I think that's right now, that's just where we find ourselves.
All right, let's talk about safe haven assets. So normally in an environment like this, you would think that you'd be buying treasuries, right? U.S. treasuries. You're buying the treasuries and they're going up. And you have yield going down. I mean, yields have been down. I think we're 4.2% or something like that last week. And here we are. I think it's 412. So, it hasn't been a massive move here. I think we all know where you think rates are going higher. This shutdown, and the longer it goes, does put the Fed in a difficult spot, right? And if we look at the CME, let's pull up the CME Fed funds tracker here. I think this was 83 or so % for a 25 basis point cut at the October meeting, which comes at the end of this month. Now it's like a near certainty. So like the longer the shutdown, guy, do you see that that's pricing in 2 cuts this year of 25 basis? Does that start going up in 2025?
Yeah, well, October and December and clearly in play. And I think it's pretty much a foregone conclusion that you're going to get both those. You're going to get 25 cut in October, no meeting in November, 25 cut in December. And
the guy freeze here? Is that what we got going on? Okay, so the idea, though, that we might have more cuts in this year based on uncertainty about economic data, uncertainty about what the extended, sort of shutdown might mean for economic activity, that sort of thing. I mean, the Fed's normal playbook would be to cut interest rates, right? And so, Guy would tell you right now, if he was here with me, and I miss him already, that, it doesn't really matter what the Fed might do with their cuts. Last year, let's pull up the 10-year U.S. Treasury yield. When the Fed cut 100 basis points from September through December, we saw the 10-year yield actually rise, right? And if we see the 10-year rise and then we see the longer end of the curve rise, well, that should actually put pressure on long duration assets, some of these high valuation tech stocks that we all know and love relative to the AI trade. But the real issue in my mind is that if you have these stocks that continue to go higher, Guy, we're talking about what might happen. Yeah, you're back, baby. I just said we were talking about. I was just talking about if we do have, let's say, the 10-year start to rally, let's say the 2030, right, start to rally, that should put some pressure on some of these high valuation, long duration tech stocks, right? But the truth is, if they don't put pressure on them and we see, the 30-year move higher and all that sort of stuff, for inflation concerns and debt concerns and, all that sort of stuff, then you have a scenario where the secular AI shift is so much more powerful than the macro. And sooner or later, the chickens are going to have to come home to roost on that guy.
I first of all, I apologize. What I was going to say was a government shutdown should be bearish for the bond market. And, you talked about safe haven, which I totally understand. And I'm sure there's some people that actually bought treasuries on the back of that. But if you think about it, and the word we use all the time is confidence. I mean, it's just one more confidence sort of check off the box, or one more confidence detract there in terms of the market's perception of what's going on in the United States. And I think it's really bearish for the bond market. So I'm not surprised the bond market rallied early. I think there's a very good chance that TLT closes on the balls low of the day. If in fact, what I think is happening is happening. It's 89.20 right now. I could easily see this thing around 88 3/4 by the end of the day.
Balls low, not a technical term, but
No,
it's something you'll hear on trading desks, or you have heard on trading desks. What sort of balls are we talking about here? Are we talking about?
Well, no, I mean, it's like, bald elephant, giraffe. I mean, balls. I mean, it's just a term we used to use.
How many balls do you think, are you going to throw into that whole mix?
Well, hopefully just two.
But
more than two would be.
Okay, but so is that where you're going?
I'm sure
it's like, is it like we're talking about cojones? Is that what we're talking about?
No, that's what. Yes, huevos.
Okay, so you say this every once in a while.
Remember that in Major League?
Yeah. Oh, by the way, Charlie Sheen, I just heard the show. He's got a book out. He's got a documentary, which I hear is great. He was on Conan O'Brien's podcast. I want to say a week ago or something like that, or 2 weeks ago. Really good. Major League. What's interesting? We have a little time here, right? Yeah. So he's obviously, his father, Martin Sheen, is just a legendary actor, right?
Legendary.
Just a legend.
Played the president.
Yes, he was West Wing, that sort of thing. Great actor. So when he was coming up, this is Charlie, Emilio Estevez, his brother.
Well, it's Martin Sheen's real last name is Estevez, and yes, he changed. Yeah,
correct. And so he described this a little bit on the thing. So Emilio starts getting parts. He's kind of moving along here. Charlie goes to Martin. He said, "Hey, Dad, can I do a little Sheen action here?" I think Martin, Sheen and Charlie Sheen. It's easier off the tongue, easier to remember, that sort of thing. So he gets offered. You ready for this? The Karate Kid. He gets offered Ralph Macchio's job. Okay. But he had already agreed to do this second iteration or the sequel to some stupid like monster movie or something like that. It was gonna record in Budapest, and then he gets a call from his agent, and they want you to do this movie. It's gonna be big. And he goes to his dad, and this is exactly what Guy Adami, the father Guy Adami, would say here. He said, "Dad, I really got to do this movie. My agent's really, and he goes, "Well, what's the problem?" He goes, "Well, I already agreed this other one. I'm supposed to go to Budapest and this and whatever." He said, "Son, having this movie that might be a huge thing will not be as big as keeping your word in the long run."
Hundo.
And
Look at Martin Sheen.
well, he
100%.
also said this, it is interesting to me. He said, Conan asked him, like, when you look back, do you have regrets about that? And he goes, I don't think I would have had the career that I've had. He got Oliver Stone, put him in Platoon, and then Oliver Stone put him in Wall Street. You know what I mean? And then he started doing his comedic chops with things like Major League, and he showed a lot of range and that sort of stuff. Right?
Okay, so who was sorry, Amanda. We have Butters in a second, I promise.
Oh, shit.
What actor was discovered in Platoon? Very famous actor.
I'll get it.
When you say you don't realize how close you are.
Give me a sec. All right. So some of the great actors in that movie, Kevin Dillon, Matt Dillon's brother was in it.
Forrest Whitaker was in that. But
you had Tom Berenger. You had who was amazing. The guy who was in the redhead who was in Wall Street too. No, okay.
He was in it though.
Got it. Johnny Depp.
Johnny Depp.
That's
Johnny Depp was discovered in Platoon. Yeah, a very bit part, but he was in the movie. By the way, and we're going to go to Butters, I promise. Charlie Sheen was in Ferris Bueller's Day Off.
Oh yeah, he had a small role. He was like the pothead in the
police precinct that Jennifer Grey winds up, digging.
Great movie. See, that's a movie. You like that movie?
Love that movie.
Really? Because I just figured I've never really heard you talk too much about comedies over the years, and people think that Guy Adami maybe doesn't have a good sense of humor.
Oh, I'm actually very funny. Bill, really? ask Bill Hockman.
Like funny, haha. Like, do I amuse you?
Funny. Yeah.
All right, you ready? All right, let's do this. You ready?
Don't say earnings.
I'm not going to say the thing. I'm not going to do the thing. You ready? 1, 2, 3. If it's Wednesday, no, let me do it again. 1, 2, 3. Guy, if it's Wednesday on the market call, it's what?
It's Butters.
There we go. All right. So John Butters, he's the senior earnings analyst over there at FactSet. Every Friday, he writes the Earnings Insight blog, but you can have it in your email box. Go to factset.com/insight/subscribe. We get to preview it on Wednesday on the market call. So let's get into it, Guy, because John, as we head into earnings season, which is going to come upon us in the next few weeks or so, his data is a great guide for a lot of the stuff that we should be focused on. So let's start with this guy. Let's go to Q3 bottoms up EPS estimate for the S&P 500 increased by 0.3% during the quarter. This marked the first increase in the EPS estimate during a quarter since Q4 of 2021, also 0.3%. Now, this is interesting because we know what was going on in Q3 of 2021.
This is great. The visual here is wonderful. You say this is 4 years now, and kudos to Stephanie Link, who was on our podcast a few months ago, maybe longer, I'm not sure, but she talked about how earnings expectations were way too low, and you're going to start to see some revisions higher. And I think that's what we're seeing right now. Now, it's not exactly robust revisions higher, but it breaks, what is it, 4 years of these downwards revisions. So this is encouraging. But with that said, we saw the market rally during those negative times. Is this inflection now the sign of a potential top? I mean, I think that's what the markets are trying to figure out.
It is fascinating. 4 years of coming into a quarter, right? And then throughout the quarter, seeing the estimates go lower. Now, you could also say, 2022 might have been a funny year. That might have been the sort of year that you would have expected that, but not in a raging bull market in 2023 and 2024, obviously into 2025. Those were 2 years where the S&P gained 25%. But what it speaks to, Guy, and this is something that you brought up on numerous occasions over the last couple of years, multiple expansion. I mean, that's been a big part of it, because if you've had estimates come down over the quarter, and then you have, let's say, beats and raises, but you're beating a lower bar and you have a stock market and valuations that continue to move higher, we know what the culprit is.
That's it. It's all, well, that's exactly right. And you just look at that chart and you say, well, wait a second. You've had earnings decreases, yet you've had the market going higher, and that speaks to exactly what you just said, multiple expansions. So now what I think if you want to continue to be bullish, what you're hoping for is the baton is going to be passed from multiple expansion to earnings growth, but we're light years away from that, in my opinion.
All right, let's go to sectors. 5 sectors witnessed an increase in EPS led by energy and technology. This increase in EPS for the energy sector was mainly due to double-digit increases in the medium EPS estimates for Exxon and Chevron. All right, guy, this is fascinating because look at how crude has acted. Look at how these drillers have acted. I mean, this is something that we've been tracking for a while. Help me explain these 2 sectors.
Well, it does make sense. I mean, the increases on the energy front, I mean, you've had a sideways crude market. You've had more efficiencies in these names. I mean, they just run better and it leads to earnings growth. So I can absolutely get my arms around Exxon and Chevron. And by the way, some other downstream names as well, like Marathon Petroleum and Valero. What I can't get my arms around necessarily is the lack of stock performance on the back of this. So the question I think you have to ask in terms of energy, is this a precursor to a move back into a rotation into the big cap energy names? Obviously, that has not been the case, but this should be an encouraging sign, I would think. All right. Meanwhile, you have Exxon trading 112. I mean, it's the same price as it's been, I want to say, for the last year and a half or so.
Right. And you have crude oil down at 61.5. I think it was trading at the high 60s a few weeks ago. All right. Well, we appreciate John Butter's work. He's a senior earnings analyst over there at FactSet. He writes the Earnings Insight blog. It can have it, or you can have it in your email box, factset.com/insight/subscribe. We will continue to highlight John's work as we go through earnings season. We think it's a great guide. All right, Guy. Last thing, I promise, Doug Cass. Grizzly 2 was the name. Grizzly 2 was the name. Revenge was the movie Sheen did instead of
Grizzly 2 Revenge. I don't remember this Grizzly 2.
And then Jacob had a request here, Guy. Show of hands, who thinks Guy Adami is funny? Like that was Bill, you like that? Like that's how you work a crowd. That's crowd work. Show of hands, who you think or who thinks Guy Adami is funny. All right. You want to take us out here, G Money?
Been fun. I mean, sorry, Amanda. Amanda's beside herself right now. She sent a picture of the baby the other day. Baby is cute as can be. It really is.
Amanda's in a post-birthday malaise. Who knows what she did last night? But we appreciate it.
If I had to guess, she watched a little bit of baseball. Is just my instincts. But what the hell do I know? By the way, it might be stormy there in North Carolina where she lives. A lot of rain.
Wait, why is it that the in this wild card series, all 3 games are?
Well, that's the incentive to be the better of the 3 of the wild card parts. So you're giving an advantage to the team that had a bet. By the way, not that it matters. I think the Yankees had the 3rd best record in Major League Baseball, behind that only of the Milwaukee Brewers and the Toronto Blue Jays, who, by the way, they were tied with, and they lost in a tiebreaker. Doesn't matter when you're down 1-0 in the best of 3 series with your back up against the frickin' wall, which is what we're up against tonight. But we have Carlos Rodon on the hill, and I have confidence in him. He's been a bull the entire year, and I do think the Yankee bats will come alive. They ran into a stud. Crochet is probably the best pitcher in baseball this year. He should be the American League Cy Young winner.
Bill wanted to correct you, and he put the Phillies in there, Guy. But whatever.
Oh, the Phillies. Sorry, Bill. So the
Brewers,
Brewers, the Phillies, and the Yankees. There you go. And tell Bill, well, I won't say it because we're still on TV.
All right. The Yankees have to play Yankees baseball, Guy, to take this series.
Okay. Yankee baseball, right.
Somebody said to me yesterday
that
killed them, that they love that.
Because it's dumb.
All right. We got
to play jet football. Now, maybe we should get away from jet football.
2 days in a row. We're not going to do that. Thanks everyone for being here. Fun show. Covered a lot of ground. We'll see you back here tomorrow. Liz Thomas, Guy. Liz Thomas is going to join us. So we'll talk to you all tomorrow. Thanks.